Good morning. How is everybody on this Friday, April 25th?
I'm
Good,
fine.
good morning.
Good morning. How are you, Bill?
I'm very well, thank you.
Good.
Always good.
Good morning from Mel.
Always good. Good morning. Hopefully, all have had a good week. As always, this is not advice or recommendation. Do your due diligence before you invest. And
Absolutely.
be vocal today. Ask questions.
Let me get
Mark,
rolling because there's we've had a couple of days of up, okay, which is good, and so it has presented us with some setups. The market's still kind of wonky for me, but we'll take a look and we'll start out with the heat map here of yesterday. Okay, so this is just a one-day picture of the S&P 500. Okay, and you can see lots of green. Had the bits of red. IBM came out with an earnings, so you saw them knocked down. You got, some up here in consumer like beverages. You can kind of get an idea of where, things were good and where things weren't. So again, for the most part, pretty good day. So if you were trading on a daily, you're doing probably did pretty well yesterday. If we go back to, I like to go back to year to date and see what we're looking at. And here's year to date, okay, on the same map. So if you're more of an investor, you might not be feeling the happiness year to date as yet. I mean, if you were in the mags, Microsoft's down 8, Nvidia's down 21, Apple's down 17, Google's down 15, Amazon's down 15, just a lot of the tech is down. Some of the financials are up. You can see where the greens are: telecom, consumer defensive, utilities, basic materials. So that's how I always kind of go look at investing versus trading. And then today we're looking at futures are down, and this was about probably 45 minutes ago, so they probably changed numbers, but this is about what we were seeing. And again, we're still pretty news driven. Next week we have a lot of tech earnings out, so that's going to probably affect some of the markets. But we still are on this tariff thing, and one day we're talking to China, one day we're not talking to China, one day we're doing this, one day we're doing that. We have tariffs, we don't have tariffs, and China's playing that too. They're thinking about taking tariffs off on some things for us, so maybe things are getting a little bit better. Yesterday, or the day before yesterday, we opened up and we closed lower, even though the market was up. Most stocks opened up higher, but closed lower. Yesterday was the opposite. We kind of opened up higher, but we closed higher. So that's progress. Okay. And then, we talked about the green mega candle. And I'll show you. And the green mega candle was, that the big old day that we had, that kind of brought us back after the whole tariff scare. You can see here's, the mega candle. And one of the things that I did is I drew a line right, where we closed, and we still haven't been able to get past that level yet. And I was thinking, well, maybe today we'll break it out, but we'll see. The markets are down, but it's not how it opens; it's how it closes. But market has structure, and you can see how the market moves, and it moves up and structured and orderly. Even though it goes down, it's orderly and back up. And once this tariff came in, I said the market structure is broken for me. It's just boom, 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 and we're starting to get a little bit better, but we're still in that that phase of kind of being out of order. We're not back to where it's kind of in order, structured. So again, this is the S&P 500. Let's look at the Qs. Now the Qs did open up just a little bit higher, or it closed a little bit higher than when we closed, but this is a rounding error for me. It could hit and still come back down. So again, it looks the same as the S&P. It's just pretty wonky still, and the market structure is still not there for me, even though we're seeing some signs of some improvement. And I'm starting to see
What'd
better
you say?
setups. Starting to see better setups in the market too. So here's the Dow, and the Dow hasn't even gotten close yet. You can see to where our mega candle closed. So it's still down a little bit. Oscillators are still down a little bit. So again, I'll move it back in. We've been watching cash. We've been watching the dollar index. We came down. We're just kind of cruising right along this support line on the dollar index. The 9 has come down. So again, gold looks like it's going to be down a little bit today. Yesterday it closed, up right along the green, the 9, but right under some resistance, the intermediate resistance line. So gold's kind of hit its head a little bit here. We'll see what happens. NVIDIA is always a popular one. Trent likes to follow. Again, here's where we closed the mega candle. We're still below that. We still have a downtrend on NVIDIA, you can see, even though we've been up. Oscillators aren't quite where I like them, but we're under the 200. But we just haven't been able to get past that closing area yet on NVIDIA. Meta's the same. Here's where we closed up here. Here's the 200, right under the 200. And again, we're right along a level of support. Seeing a little bit of improvement on Meta, as far as the oscillators, but anything that I would want to do, I mean, we're still seeing this kind of pattern. Nice little bump up. We'll see if this gap gets filled today or we go up. Apple is kind of different. Apple has actually gotten above, several times where it closed, on the mega candle. So and it's also finding support at the 20. So Apple, if you trade under the 200, Apple looks like a potential trade for a swing trade under the 200. But always go back and look at the risk factors involved with trading under the 200. But Apple is one of the Mag 7s that actually looks fairly decent. It's the cleanest shirt in the dirty laundry, as they say. Google had earnings yesterday, so it closed right above where we saw the mega candle. We'll see what happens today. It looks like it's going to bump. I think when I looked last time, it was going to open right up here, so it's going to blow through some resistance. But we'll see. If it opens up here, we'll see if it goes up, touches the 200. Or if it comes back down like we've seen 2 days ago when it opened high and came back down. So we'll see how Google goes. But, Google had some pretty good earnings yesterday. Tesla, we'll take a look at that because they had their earnings this week. Tesla's just cruising, between the support and resistance levels still with Tesla. Other places we look at on the Bitcoin. When you look at Bitcoin, it's kind of breaking above this level here that we've had. When you look back, I drew this line and I said, when we hit here, I went back and looked, and you can see there's several times where these purple circles are, where you found either support here or we found resistance going back up. So we have to get past that level in a sustainable way. And if we do that, you can see, our highs are up here. We have another level of probably some resistance. You can just go back and eyeball it, probably right about in this area here, which would be around 99,000. So we'll see the Bitcoin can keep going, but you've got a strong MACD on Bitcoin, and a lot of money's flowing into it. And you're seeing Jack Mallers and SoftBank and Cantor Fitzgerald just put together a company to become a treasury again. They're going to buy $42 billion worth of Bitcoin. The whole idea is Bitcoin only has 21 million, 19 million and change have been mined already. So there's not much left in the market. So it becomes a supply and demand issue. So it's going to be interesting to see if Bitcoin actually can continue to kind of decouple from the NASDAQ, in the S&P. But, this one hasn't really gone as wonky as we saw the S&P or the NASDAQ. It's actually showing some structure and how this market moves, and so we'll see. Of course, that's gonna bump MicroStrategy, and we looked at this yesterday. MicroStrategy's hitting right up on this resistance level, but sell orders are way up here at 378 now. I think they were much lower yesterday. So if it can get past this with Bitcoin price moving up, you could have a move. But again, this green line's pretty tough. But we'll see. The way these markets are, the structure isn't there. We're seeing both on the top side and the bottom side, price action just blowing through support and resistance. And it's taken time for the, the back looking moving averages to calculate it, and calculate the support and resistance levels. So again, it's a different kind of market. If you look and you do the ETFs, you can see the IBIT is following. This is the Bitcoin BlackRock ETF, and you can see it's moving much as Bitcoin does. And you've got some resistance again up at 54.88. And then another one, Coinbase, is an under the 200 stock. You can see, we're underneath the 200, but we have hit the 9 several times, and now we're starting to move up along with the price of Bitcoin. You've got some sells about 220.97, and of course you've got the 200. We'll see if this can come up and hit the 200. We said MicroStrategy and Bitcoin, they went down, bounced off the 200. We'll see if Coinbase can actually get back. I'm going to look at a little blitz here of stocks. I'm going to go pretty fast. So we talk about momentum stocks. Momentum stocks are stocks that don't have an upper resistance level, but the momentum's moving them higher, and they have a higher risk, but you can get some good reward off of them. And the one that I found today is Netflix. You can see what's happened. We don't have a resistance level. We do have some sells at $1,132, but this one's been skyrocketing, after earnings. But we're 3 times outside of the Bollinger Band. So normally you don't go more than 5 times outside of a Bollinger Band. So just be careful. But this one's been on fire. It would have been nice to get in back, right when it hit over the 9. You would have had a nice ride up on Netflix. Some of our under the 200 stocks that we've been watching this week, Align has been doing really well, broke above the 200. Now it's riding the Bollinger Band up. You got some sells about 189.64. We've been watching this one all week. Another one we've been watching, WYNN, Win. Okay, Win's done a nice job coming up. It's again under the 200, and you're going to have some resistance at the 50. But you got to watch this because they have a lot of operations in China, and China could pull the plug this weekend, and then Win would not do so well. And then another one we've been watching, SRE. Oops, he went away. Has been a nice, Sempra Energy has been a nice run too. You can see instead of going this way, we're going this way now, and the trend is your friend, as we always say. Got some nice support twice on the 50. Bollinger's moving up. Got some sells about 76.85. And I mean, I've got a ton of these that are under the 200 now, with the way the market's been going. NXPI, semiconductor. You can see it's under the 200. But again, zooming up, I'm just going to zip through STX, which is Seagate. Okay, nice look on that. ALGN. Okay, Align Technology. Nice run here. This one has some room to go up.
Yeah, we did that one.
Yeah, definitely.
Okay.
Yeah, we did do that one, didn't we?
Yeah. No worries. Bless you.
Are okay. Rockwell. I mean, so we're starting to see, what I like to see is this swing down. I like to see it consolidate and then move up. That's really the pattern I'm looking for. And even if it's under the 200, a little bit riskier, you can make some money on that. Now let's go look at some watch list ones. I'm trying to move through. There's just so many.
Take your time.
Berkshire, okay, has come back up. One of my favorites, above the 9 2 days in a row. Here's the all-time high for Berkshire B. So I'll be watching to see if it comes up. It's kind of boom, boom, boom. It's kind of a natural resistance of it. If Berkshire B can get above that and sustain, this would have some room to run. They got $327 billion in cash sitting on the sidelines, waiting to buy. Next weekend is the shareholder meeting here in Omaha. That always creates some excitement. That's on CNBC on Saturday and Friday. So I'll be watching Berkshire for another kind of swing. I'd like to see a little more strength on the MACD.
Are you going as a representative?
I am. I'm going Friday.
Good.
Yeah.
We need a representative there.
If I get my T-shirt, maybe I'll wear that. My coffee mug.
You should have it by midweek.
We talked about Dollar Tree. You see it came back in, but you'll see that, so it doesn't scare me so much. It actually is a better thing to see, kind of come back in as long as your oscillators are good. You got a nice golden cross over the 200 with your 9 on Dollar Tree. So again, we've been watching that this week. Dollar General, looks the same basically. You know, watch your sell orders up here about 98.15. Wells Fargo we looked at this week. I mean, Wells
Banks are
Fargo
doing
got
good.
got up to above the 200, above the 20. The oscillators look good. Wells Fargo, you know, again, that same pattern come down. This got a little wanky, but then it settled out. It settled down. And this is what I'm trying to look for in the market. This market structure settling down and then coming back up. And we're trying to get there on the indexes. We're just not quite there yet. But within these indexes, you can find these stocks like this. IONQ we talked about this week.
There's a
Again,
ton of support on
yeah,
that W. There's a ton of support.
yeah. And it's just Moss, we talked about Mosaic, the fertilizer company. Look at this. Once it got above the 200, and then we got above support, and it's just run. Now, you got to watch it because we got resistance up here. But this was a nice run that we talked about earlier in the week on Mosaic. And GRMN, I had so many guys, I just had to pick.
It's okay. I'm writing them
Garmin,
down.
Garmin finally got above the 200 and bounced off it yesterday, and it's above the 20. So I mean, it's a $199 stock, but we're seeing the oscillators look pretty good on Garmin. You know, so this is one that, you know, depending on the market, this is one that's, you know, I want to see it stay above the 200. So maybe a back test on the 200, you know, on Garmin. I think this was on the list, but this one, Schwab got an upgrade today. So you're going to see this one probably go up, you know, hit our resistance at open. So we'll see how it does. But Schwab came two days above the 50. The 50 is starting to roll a little bit. We've got trending up on the short term trend monitors, the 9 and the 20. Oscillators look pretty good. Schwab's in the financial services also. JCI, this is in healthcare. Finally got up 2 days above the 200, which is what I like to see it. Now it did it over here too, but we actually have closed above the 20. You're going to find resistance up here at the 50, but there's a lot of support level right below it. So JCI looked good. NRG, energy popped up, have a nice gap up, finally above the 200. We got support here. We're looking at upper Bollinger, you know, watch out for the resistance level above. And DBX, Dropbox. Okay, this is finally got above, you know, the 200, the 9. We got above everything, and then, you know, it came back yesterday, hit support. So DBX kind of made a little bit of a run. We'll see where that goes. You have some resistance selling at 29.14 on DBX. So, you know, I follow my trading guidelines. Two of them that I follow pretty well are exit before earnings, and this is on swing tradings, okay? And it can burn you either way. If I would have had IBM and exited before earnings, I would have gotten out at 229, and then the next day it would have been at hold on. I would have exited at 245, and the next day we've been at 229. So this whole gap down would have saved me. Okay, so that's why I exit. Now I can burn you the other way too, but like on ServiceNow, okay, I might have exited here, okay, if I was in ServiceNow, and that would have been at 812.70, and then the next day I wake up and it closes at 938. So I can't worry about that. It's a gamble. I don't know which way it's going to go, but it always seems like earnings now are either 15% up or 15% down. And I'd rather not lose 15% down than risk missing 15% up. And the other thing that I don't do is I try not to do is buy swing trades on Fridays, because I do not want to be on the weekend with weekend risk, meaning stuff can happen, especially now with what we're going through with tariffs. News can come out, and Monday morning everything dumps down and you're locked in all weekend. So that's my rant. Sorry, Trent, but there was a lot of stuff that changed.
No, it's all good.
Yeah.
Today I'm going to just share a bit of a history lesson. If I can find my chart here. In 2016, the G20 got together in Shanghai for the Shanghai Accord. This was not an official event similar to the 1985 Plaza Accord. But what this was a meeting of the central banks to get together about creating economic growth on a global scale. And what they decided to do was, one, they wanted to devalue the US dollar and stabilize the Chinese yuan. And in doing so, in a 2-year period, they devalued the US dollar by was it 12%, and then gold in reaction went up 20%. And this was a coordinated effort to basically create global economic growth again. And we did see that. We saw that we did have the pandemic, but we saw that eventually happen. Fast forward to today, we're saying something very similar to that, and that is a devaluation. Let me pull up my chart here.
550 rate.
There we go. This is the US dollar here. Since what was it, early January of this year, we've seen the dollar go devalue, and we've seen gold,
based on
the gold here,
and how that compares to
skyrocket.
their peers.
Here, as you can see, the two differences between these two
Trent,
charts
you might
here.
want
We
to
shut that down.
shut that audio down.
What's that?
Shut that audio down. We can't hear you.
iPhone.
Over the next 3 months or 3 weeks or 3
Oh,
iPhone
somebody
6.
else.
Yeah, we just
Okay.
can't hear you very well.
Okay, thanks. Please share this with y'all. So this devaluation of the US dollar and the increase in value in gold was a coordinated effort between 2016 and 2020. Today, we're seeing a similar event happen, but this is not a coordinated effort. Rather, this is more a flight to safety. And what we're seeing because of this event is we're seeing the money that has supported equity markets. Let me pull up a S&P chart here for y'all. Sorry, I got a million things going on here. We're seeing, get my head out of the way. We're seeing the S&P lose value. And what has propelled the S&P for 2 years straight with a 20% plus each year for the last 2 years gain is foreign money coming into US equity markets and propelling them higher. We saw this instigated with low, cheap rates on Fed funds rates. Borrowing costs were very low because of the pandemic. And now we're seeing a contraction in that. And what propelled the 2016 to 2018 move to, with foreign money coming in equity markets, devaluation of the dollar, making our currency more affordable, is now actually happening again. But the result is that foreign money is leaving global or US equity markets. And it's doing it because it's trying to survive. You're seeing countries like China, Europe, and a bunch of other countries also straining economically. And this is more a flight to keep their economies higher. And what the point of all this is that without foreign dollars coming into US equity markets to support and to propel things higher, without the cheap money, lowering of money in the making money more affordable, we should expect a continuation of volatility going forward, an expansion of volatility. When you look at the options market, gamma has shrunk over the last month or so. Unfortunately, we're looking at that expanding again as we get into May with jobs reports, employment reports coming out. These are significant reports that are going to tell us more about what truly is happening in our economy based on what's going on month to month, quarter to quarter. My reasoning for this, I'm sharing this with you, is because when you see money devaluing of the dollar, when you see money leaving equity markets, and it's not a structured global effort to propel growth, this is when things get crazy. We've had a good week. Going into next week and into May, caution should be had because we can see volatility increase again. We can see economic conditions and reports come out unfavorably. This week, many reports on shipping have been put out there. We've seen a lot of what was coming to the United States. I was looking at the transportation index, the Dow Jones Transportation Index, and we are down 30% versus during the pandemic, we were down 40%. We are in the midst of the beginning of a lack of goods and supplies in the United States. We just haven't felt it yet. I went to the grocery store yesterday and I took my extra time. I don't like going to our grocery stores because tourists are there and it's total mayhem. But this time I walked around looking for what is coming in from China and overseas and where are the shelves getting thin. And I'm not seeing as much yet, but I'm curious to see as the weeks continue, how are our shelves going to thin? What products are going to be less and less? And so my point is, as we go into the weekend, do your homework, ask questions, be curious. As my wife said, I went in on the Google and I started asking questions about something she was looking up. Take some time this weekend to ask questions and see what truly is happening. But be careful as we go forward. All right, let's open it up to the floor, discussions, questions, input. Love to hear it.
Wow, we got an energetic group.
I could say unless someone wants to go first, anybody
Go
else?
ahead, Paul. Go ahead. You be our guide.
So I mentioned a few stocks, but I'm still accumulating, but I've been accumulating for maybe a week, 2 weeks. I'm in Netflix. You already showed that.
Yeah.
I like Palantir still. So I'm accumulating that until I see some nastiness.
There's Palantir. Yeah, Palantir actually, the resistance level has moved up a tad on that, so that's good. And you got some sales about 112.78, but you know,
Yep.
nice bottom left to top right.
Yep. But I like the business.
Yep.
The other one is GEV I mentioned yesterday.
Gang. Okay. Where's all brand new gang members?
Yeah. I'm gonna take and see if this moves, this intermediate support level. I'm gonna go short term. Oh yeah, okay. So when I see it like that, you're right up on. Let me get this. I took it to the short term. You can see right where it went, Paul, right to the short term resistance level.
I notice you're looking at a year. Typically, you do a 3-month. Is there any reason?
Yeah,
Yeah.
I kind of look back because I like to see where we were, and Mike's always telling me, keep looking backwards to see, and it gives me a picture of where the highs are too, and I can get kind of a sense, see where the support level is that the program puts in. Go
Mhm.
back and look. It's right where, look at all right here, support and resistance. So that's kind of why I'm looking back a little further, Paul.
Gotcha.
And then you can probably see, here's our resistance level in the short term, and look where it goes right here. So I kind of learned from that. So, but yeah, normally I am on the 3 because it's closer and I can see it from a shorter term.
Yep.
But like this, you kind of get a distorted picture. That looks really good. Short term, it looks good, but you go back to a year and you say, oh, here's the high up here. And that was earnings too. Look at that. That was earnings. It was really rocketed up on earnings. And once earnings hit, boom. And that was in January. And then it was kind of a downward sideways pattern. Then you came back to earnings, and this time earnings kind of popped it up a little. So
Yep. I
anyway,
getcha.
sorry.
Hey,
What else
Mark.
you got?
Well, CrowdStrike. We talked about sorry, Trent.
No, go ahead, Paul.
That's a good
That's
stock.
a
Look
good
at
one.
CrowdStrike. Yeah, look at that. Again, look where the high went. I mean, this is short term. Let me move this back to intermediate, where I like to watch it, see where it puts us. Oh, didn't really move it. Okay. Yeah, CrowdStrike.
Matters.
Uh,
Be a little
LeBron,
closer. Okay, we got.
right.
Yeah, I like that one, Paul.
Yeah, and
Wait, look at,
before you go, I just want to mention one other thing. Just, I'm noticing, given the AI
thank you.
bubble, or not bubble, I don't know what to call it, the AI push, the initiative in the stock. I'm seeing a lot of companies that are in that sector doing very well regarding earnings. And I keep in mind what you said about earnings. But the other thing I'll point out is they are moving. So the companies like you don't have to go through and put them on a chart, but Eaton, Amphenol, Vertiv, all of those ones are starting to pop now based on, I think, the earnings. Of course, like you say, Trump or some narrative can knock them down. But
Yeah.
the pin action in those sectors are no joke right now. So
Okay. Yeah.
so
I mean, I'm looking at them. Yeah. Money flows to where value is, right, Paul?
yeah, exactly.
Yeah.
So these
Okay,
were
Hey,
high
Trev,
Mike,
flyers a few months ago. Now they're beating
what'd
up.
you have,
put
Trev?
up, Brian's asking for you to take a look at IONQ.
Oh, we just looked at that one.
Yeah, energy.
Oh, we did.
Yeah, we had that on our list. That's been on our list all week, basically.
Okay.
Finally got
How
above.
about,
What I like here is that, we got a golden cross above the 50, so we're seeing the 20 and the 50 trending up. I'm seeing the Bollinger Bands trending apart, and we're riding the upper Bollinger, and we've got some fairly decent oscillators, but slow mover, got some resistance, sells up around 31.25. What else we got?
uh, let's let Bill ask his question.
Okay, Bill.
The last person.
My question is, what about a stock called TEM?
Tempest AI Class A.
But
Well,
my
they're
question
just
is, how far will it go?
that's a good question, Bill.
Healthcare.
Right now, it's right up. It went through a bit of a resistance, and it hit about the 50 and the upper Bollinger Band, and then you've got some sell orders at 54.77. So if it gets up to that point, normally, Bill, when I see it hit this resistance level, that's usually on a swing trade when I get out. However, it did pop above the 200, and we are in unstable markets, I call them, and the market structure isn't there. So just depending, we could see a run, but I don't, you're gonna have some sells about 54.77 if it gets up that high.
Esther
Thank
is
you.
asking about CVNA.
TV and Carvana. Yeah, we were watching this one this week too.
On a trading call.
And that's same thing. Look at the 9s crossing over the 50. We got the 20 moving up. It's above the 200. You'll probably come up, hit the Bollinger Band. You've got some pretty good resistance at 243. If it gets past that, it could go up to 253.52. And normally, if it does that, you see it kind of go like this and then come back down. We'll see. That's during the normal market structure. But right now, I like the upward turns. I like it's above the 200, which we haven't seen a lot of them above the 200 lately.
That was a
But
good
again,
pick, Mark.
What's that?
That was a good pick, Mark. I didn't buy
Yeah,
it, but that was
a
pick.
good one.
Yeah.
Yeah, that was a good one. We're running out of runway though. It looks like up on this resistance. We'll see how it goes. What else we
Take
got?
a look at Jay's asking about NTDOY Nintendo.
Okay,
Whoa.
Nintendo. The first thing I check always is the volume. So I'll come down here and I'll run this volume just to make sure I'm at least over 700,000 trades on average. Otherwise, you get trouble with bids and asks and spreads get too far. This is interesting because there's so many gaps. It's just these big candles are interesting to me. Right now, you're trading outside of an upper Bollinger Band. You don't have an upper resistance level. So it would be basically momentum right now. You're above all the all the trendings, which is up. Your momentum is at 67, which is pretty high, and your Your MACD is good. You're outside of the Bollinger Band, which normally, is only 5% of the time of trading, or you're outside of that Bollinger Band. I don't know if they came out on earnings. No, it doesn't look like earnings. Something made it pop up a tad
Yeah.
bit. But again, this is a momentum stock, and we'll see. You just gotta be, you gotta stay on top of these guys because they can turn on you pretty quick. But right now, it had this big gap. I don't know what caused it. I don't follow Nintendo.
I noticed that as soon as that came up, I picked up that Take-Two was up. TTWO. So these are
Gaming
Nintendo's
companies.
probably more of a manufacturer, but Take-Two and EA
Yeah.
and those other stocks
Yeah.
for whatever reason. I'll look at EA.
Mark, can you
Nah,
span out
EA
to a
ain't doing
year?
nothing.
What's that?
Can you span out to a year on Nintendo just out of curiosity?
Yeah. What is the symbol again?
NT, hold on. Let me scroll back up. NTDOY.
Yep. Let's go back and take a look at a year. Yeah,
Oh,
so
we're
it
at
looks like
all-time highs.
it's at a high. Yeah.
So possibly a pullback, filling of that gap at some point.
Yeah.
And then if it holds, a base building and probably a move higher,
This thing likes
depending
to
on
gap.
consumer spending.
This likes to gap a lot. Look at that gap,
Yeah.
gap, and they'll fill. Look at this gap here and down. Wow, gap, fill. So yeah, this one would probably give me a heart attack to be in. That's
But as
just
an
me,
aggressive investor,
and I'm old, so this is for the young. This is for the young to look at this one for me. So
It's a
Yeah.
pre-order frenzy. I'm reading notes here.
pre-order, okay, before the tariffs, huh?
Yeah, it hits new all-time highs in Tokyo on Thursday.
Don't forget, you also have to take in the Japanese yen when you buy this stuff.
Absolutely. So how does that affect this now, Mike, so that people understand that?
Well, it ends in Y. 5 symbols ending in Y means it's an ADR, American Depository Receipt.
Yep, right
That
there.
means that in the US, a trust bank will gather the shares, being as the yen is what, 7/100ths of a dollar or 7/1000ths of a dollar, something ridiculous like that. So what they do is they consolidate it, put it together as a package, sell you a block of shares as one to put it at a desirable price, we might say. This is trading at what, $14, something like that.
Yep.
So it looks
19.
desirable, but that one ADR might be 2,000 shares of the home countries. If the symbol ends in F, you're actually buying the foreign shares on a foreign market, but it is directly affected by the exchange rate. And that's why you're seeing such variance there, because the yen's been out of control over the past couple of weeks.
That's a good point.
So
Didn't even think of that. Thanks, Mike. That's awesome.
yeah, you always have to take in all the factors of what you're buying, and that's the macro leg. Well, what is it you're buying and what is going to affect it? It's an international stock. You bring in a different set of risks to assess.
Yeah.
so Mike, so with that, the relationship of the currency, underlying currency to where the origination of this company is, Japan. When you're looking at ADRs, is this something that that's the first step, is to look at where's the currency, how it's acting as a leading indicator of this stock is going to move higher or lower?
Not the first thing I would look at, no. That would be part of the macro leg that I would look at. First thing I'm going to look at is the financials.
Yeah.
The
But
financials, the second would be the technicals, like you're looking here, but you have to take into consideration then the macro scenarios of the exchange rate and what have you, and the rotation of money, and what does that do to the stock exactly. If I'm looking at this, I'm going to go mark off the dates that there was news and affected the yen and see if it overlaps on the price changes.
Huh.
see
Let's see.
how much elasticity you have to the price change based upon that factor. If you look at it, it spiked a lot.
Yeah.
Where was it in February? Well, what's the news out in that time? Was there news that affected it? Where was the yen? If you well, I don't know if you could do it on this. If you overlay what the yen did,
I'd stay away unless you had conviction on this Nintendo. I mean, sounds like a one, shot thing.
no, it's just another layer of your analysis that you put in. That's all.
I don't need more.
That's a
Right,
good
that's-
point, though, Mike.
yeah.
That's a good point, Mike, because that would give me an explanation of why we have all these gaps all the time.
Yeah.
This is not normal on a US stock to
Right.
see it like this.
But you also have to remember there was a lot of liquidations going on during that period too.
Yeah.
So, that always has to be brought into your calculus of whether you're going to invest or not. And
When
again,
was the carry trade, Mike? When was the carry
carry
trade?
trade was August
So August of 24?
24, yeah. And then,
Let's go back here. So right in here,
yeah,
this was the
Thanks,
carry
man.
trade.
yeah. But what I would do is I would overlay the yen and see where the yen is to the dollar and see how that affected, because this is being priced in dollars because it's a Y.
Right.
It's being held here. What did the yen do? Because that's going to affect the price. I mean, if the yen drops, the price of this is going to drop because that's the home currency, period.
Well, I think
Not-
during the carry trade, the yen went up, right? That was the whole issue.
I believe so.
And that's what you're seeing right here.
And that's why you saw the run up. But
Yeah.
I would confirm that with news and overlaying the yen to the dollar and see how that correlates.
Okay.
Most likely it'll follow the same line. And then from there you need to infer, well, how wide is it? And then see if that's organic growth or it's the yen conversion growth.
Yep.
And once you get into the international ones and go across the border, you have that take in that extra layer of calculus to your analysis.
Could you put it GEHC?
Yeah. This Trent had mentioned this. This is the transportation index or the ETF. You can see what's happened since this is November. Right here we had a double top. Boom. Okay. So GEHC.
GE Healthcare.
Yeah. So that would be GEHC.
GEs are doing good, so.
No, they've had their time too. Look at that freaking gap. Woo! Hasn't been filled yet. But yeah, let me move in a little closer on this one. Yeah, it's starting to bounce a little bit out of, it's at least it's on the other side of the support line. So we'll see if it gets past this 20, and then you've got some sells, 69.84. So if we can get past that. Okay, someone else say something?
Mark, are you seeing a common this week, a gap filling week in a lot of these stocks? Where we saw gaps down a couple weeks ago and now we're filling those gaps?
Well, most gaps get filled, not all. Okay. Markets go up and markets go down.
Sure.
I am to tell you the truth, I've not quite seen markets that I can recall like we've seen since this whole tariff thing started with. It's just, like I said, it's the market structure to me is not normal. And I come from a quality engineering background, so I look at processes that are in control and capable. And when it goes out of control, you find out why that is. Well, the tariffs are putting my markets out of control and incapable. And until we figure that out, I think we're going to have this chop and this undecision, and all we need to do is get some signatures like, with India or South Korea or Japan. And I think you're going to see normality come back maybe in the market. That's my opinion only.
Yeah.
Any good news?
Yeah, but it's
will,
always, yeah, good news is always followed by some other bad news, or, it's just like, boom,
Yeah.
boom,
I think there's more bad news out there. Like I said it before, there's a ton of bad news that brought this whole market down, and it doesn't take much good news to make it react.
I think there's a
Yeah.
bias though in the financial media to look for bad news at this point, because there was bad news during the last part of last year, and I can go back and get the statistics of the bad news that wasn't reported as extraordinarily which is as much excitement as they're reporting this news. So
Yeah.
we'll see.
It's got that whole political.
Political, it does.
Yeah,
To me,
it's such
to
a
me.
yeah, it's more
Yeah.
political than it's ever been.
You
Yeah,
gotta be
if
you're-
careful of the news though, guys.
Absolutely, you do.
It could be fake news.
Well, I
Yeah.
think that's what we were talking about, especially some of these reports that come out of some of our Department of Labor or Census Bureau, all that stuff. I take with a grain of salt because we can go dig into them. It contradicts itself, and we've been talking about that on this channel for over a year. So yeah, you're right, Mike.
Hey, what's the economic calendar today? I know something comes out. Is it CPI?
Oh, what comes out?
Hold
I
on,
had it. I put it out every Sunday. It's on the Discord, the top stuff.
Here, I'll find it.
Yeah, it's under market news last Sunday on the Platinum Discord.
It's May. So today is consumer sentiment.
Consumer sentiment.
Yeah. If you're on X, Liz Ann Saunders, who is
Schwab.
she's chief investment strategist at Charles Schwab,
Right.
spent, I guess, last night posting all these different reports and charts. And I mean, it's a lot of this Kansas City Fed information on manufacturing and a handful of others. I would encourage you to go on her Twitter page or X page and take a look. There's a lot of great information on what's going on economically. But in general, a lot of it is just, unfortunately, we're seeing a decline in housing, some pricing issues, jobless claims are going up within the federal government, and of course, which should be expected.
I
but yeah,
also put that on market news on our Discord too. A lot of that's on there too, on our Discord.
So,
I try to keep up
yeah.
with it as much as I can.
You
Yeah.
need to keep an eye on is when is the next unemployment set of numbers.
Yeah, that should be
Those
coming
numbers
up.
are going to start becoming more accurate with the new administration.
You hope
That will
so.
be quite telling.
We haven't quite
Yes.
seen the government yet because they've given severance packages, and some of the people got, they're getting paid out until September, I think, is a lot of them. So
Yeah.
we won't even see anything until probably that in a lot of those, I would imagine.
So
More so
here-
the other companies that are laying off. I just saw Meta laying off their whole virtual reality team.
Yeah,
Where they spent billions and billions.
yeah. I think Intel is laying off too.
Yeah.
Yeah.
I hadn't
So-
heard that, but Intel, if the technology sector continues, Intel and AMD are going to be long-term plays because they provide certain aspects of, the build-outs that are necessary. Everybody focuses on the NVIDIA chips and, the big chips. But you look at the motherboard on the computer, there's 1,000 capacitors on there and resistors and all the other stuff. And who makes them?
Now look at your car too.
Yeah. Yeah. I mean, what was it? 2 years ago, 3 years ago, they stopped putting options on the cars because they couldn't get those chips. Look at Texas Instruments yesterday. Their numbers were really good. I mean, you have to take that into consideration. Just because it's not a buy today doesn't mean it's not a buy tomorrow.
This kind of looks like
TXN, I
GE.
believe, or
Looks-
TNX.
Oh, Textron. That's Textron. Oh,
It's the
TX.
opposite of the 10-year, whatever the 10-year is.
what
I
is
foggy this morning.
Interesting. TXN.
TXN? Okay. There we go.
But if you look at that sector and you put them all together, well, what's going on within that sector? Okay, is it great today? Maybe not. Tomorrow, maybe not. But the next day, maybe. Once this market straightens itself out, which you got another 2-3 months worth of
At least.
craziness here, where everybody's trying to figure out where the hell are they? And you don't have enough information coming out that's been verified per se from the government. I mean, everything that came out under the Biden administration, you have to take with a grain of salt. They were manipulating everything. And that affects what you see here. You know, if one piece of data is wrong and skewed drastically, you're going to make the wrong decision based upon that.
Well, that's exactly right, Mike, because when you look at the labor numbers, people make decisions based on labor numbers. The Fed makes decisions on interest rates based on labor numbers, and then they can come back and revise it by 800,000 down.
Yeah. But they're also 12 to 18 months behind. The Fed
Exactly.
gathers data and reacts late. The Fed
Yeah.
is 98% of the problems that you see in front of you, because they are not they're stuck in their old ways of Keynesian economics, which is nothing more than demand side, reduce rates, and that comes to a point where it falls flat, where it don't matter what rates you are. What was it? 3 years ago, we had negative returns. You put money in and you got less out.
Yeah.
Between us, I would never put my money in a bank that's giving me less coming out.
Right.
That's depreciation.
Yep.
Look at a BEV. ABBV if and,
ABB.
ABBV. V as in Victor.
Isn't that
You know, they
Budweiser?
just
Hey, Bud.
health
Budweiser's
killer.
Bud. Abby
Samuel.
B.
So they just beat earnings. So this is interesting, right? It's a nice chart, and meaning it's for a swing trade,
Yeah.
but that's going to be interesting now.
Yeah. I mean, this is what I like. I like to see this down kind of sideways, let the 9 roll back down and then start popping up, and then come down, look at your oscillators and make sure they're confirming what you're seeing.
Yeah, a reputable company, very good company. So it's
Yeah.
an idea.
Hey, Mark, Esther was asking about Meta. I think you touched on her earlier, but if you
I
don't
did.
mind.
Yeah, Meta's still kind of in this downtrend we talked about. It's on the upper end. It's still below, the 200, and the 200 is actually below where the green mega candle closed. So it's trying to break on the upside. It's above the 9. The 9's still kind of going down. We still have the 20 kind of going down, trending. We're getting a little bump on the MACD. I'd have to see. It's supposed to open right here. If I, half hour ago or 45 minutes ago when I looked, it's supposed to open up, but I still want to see these guys get past, that mega candle to tell me that we got a turnaround. And if it does that, it'll be above the 200 also. So, I haven't seen much except for maybe Apple and Google. Those are the, cleanest shirts in the dirty Mag 7 laundry bag right now for me.
Yeah.
Anyone else have a
Mark?
comment on Meta? Okay.
Mark, just to give you all a heads up, on the 28th next week, you're going to see the Dallas Fed Manufacturing Index. The 29th is the JOLT job openings. The 30th is the MBA Mortgage Refinance Index, as well as the Purchase Index, Core PCE Price Index, month-to-month, GDP growth rate, and so on. So it's going to be a heavy report week next week. So
When do they start?
it starts on the 28th. Is the Dallas, and then you get the JOLTS on the 29th, and you get in a slew of them on the 30th.
Yeah.
Chicago PMI is 30th as well.
That's also
So,
option expiration, isn't it?
Is it?
Second? Yeah.
The 30th, I believe.
I think that's quarterly or not quarterly. That'd be monthly.
It could be monthly. No, wait a minute. Yeah, it'd have to be
So-
monthly. Quarterly would be March, June, September.
Yeah.
December.
Yeah. So
But those numbers as they come out, watch out. Next week
Yeah.
it's going to be
That'd be
Next week will
interesting.
be very, very interesting because it'll depend on how those numbers go. I mean, 10 o'clock today, the sentiment, I mean, that's a big deal,
It is.
you know, which is going to
Yeah.
be bad. I mean, what's the sentiment out there? Like you said yesterday with the tipping, that's sentiment.
Yeah. Well,
That's
Patrick's a
sentiment. You know,
stripper
yeah.
hooker
just think about
index.
everybody's
Yeah.
pocketbook. Are you going to go out for dinner tonight? You know, steak dinner, or are you going to go to McDonald's?
I'm going for the steak.
Depending on how we trade today. Yesterday
Yeah,
was a steak.
Paul went steak
Yeah.
yesterday, so.
Where's
Yeah, where's my
steak at
quarter
home?
pounder, Paul?
Yeah.
When we make over 1,000, when we make, not, you gotta sell. If you make over 1,000, that's
He
steak.
goes, he
time.
takes his girlfriend to dinner.
Absolutely.
So she's
You
cheering
gotta
him
sell.
on every day.
And now,
Hey,
like you
Mark.
said, I'm fat.
Yeah.
Hey, Mark, 2 questions. We're gonna get, who is this? Mr. Marlene? Anyway, he's asking, what support resistance indicators do you use on Fidelity, please?
I show you the chart. There's meta. So I just go up the technical analysis. I hit stops or I hit support and resistance. You can do patterns and events, but these are the, so it puts in automatically. Let me get a cleaner chart here. Let's go.
Got to probably video on this, right? This week.
Yeah, we do have a video on it.
Yeah, compared to the website.
So you can see right here, it put in resistance automatically, and you can modify it. I always keep mine on intermediate. Now, when you're playing along and you see it hit that, you can move it short term to see if it moves it, which it didn't. It just moved support up, or long term, which it didn't move either. Okay, so it automatically puts it in. It'll tell you support is at 131, resistance at 352, and this is on MicroStrategy. And then your stop, this will tell you where the program calculates based on wherever it gets its information, where the current sells would be, like a 378.97 is where they're looking right here. You can go above, you can go below to see where buys might be. And you can tighten it up. You can make it, you can go to the next level, and the next level, see how far out these cells are. So I find it to be a very, very cool tool to use that I use all the time. So hopefully that answers your question, but it's right up here in technical analysis.
And also
Hey,
use
Bill, what you got?
Well, you were asking about Meta. Meta at the present time is up $15.69.
Yep. Yeah, Meta's supposed to open above, right? 549.90 last I looked, but yeah, it's still, we'll see. We'll see where it ends. It's not where it opens, it's where it ends.
The street loves layoffs.
Yep. They're laying off, aren't they? Yeah. Thanks, Bill, for that.
How about CADX?
For what?
FedEx.
Sorry, CADX.
FedEx. All right. FedEx has had a nice, I like this pattern down. It hit support. We're seeing the Bollinger Band roll back. We saw the 9 race down, and now it's finally above the 9. Okay, so we're under the 200. You got the 200 and you got the 50 going down. You've got FedEx kind of trying to get past the 20, okay, which is your resistance level. I tried yesterday, didn't do it, or 2 days ago. Today or yesterday, it got up right to the 20, and that's right where it closed. If it can get above that and run, you're going to find some sells about 224.30. Again, you're under the 200, so put in your risk protocols accordingly. But these are the kind of patterns I like to see, and these are the kind that we can make money on. Just watch these markets. I'm looking at the oscillators. You're going okay. I'd like to see a little more momentum. We're at 45. I like to see 50 on the oscillator, but if you have to give up a little, at least it's heading up in the right direction. So, yeah, FedEx. Again, that's part of the transportation index. And if the economy is going down or tariffs aren't going to, we're not going to have any products to unload off of ships and go to warehouses and have, people order them and have FedEx deliver them, or UPS. The same. Let's look at UPS real quick.
3 days ago, there was 0 trades. Now there's 100 of them.
Yeah. Yeah, you're right. I mean, I have so many, but UPS looks the same. It came down, it's still along its support level. is trying to get past the 20. So UPS and FedEx are kind of in the same boat right now. So, you know, this would be one I'd be watching. Has it convinced me to buy in yet? You know, depending on your risk factor, it hasn't for me, but depending on your risk factor, make sure if you buy in, you put a stop in, you know, so on the bottom side, you don't get burned. But again, this is a pretty good level of support right here, this blue line.
All right, Mark, we got to wrap it up. Market's open.
Market's open.
The kids are in the kiddie pool, so be patient. And we'll see you next Monday. If you're a part of the Freebie Friday and you enjoyed what we have here, we appreciate you showing up. You can click the link in the chat and subscribe, and be a part of this every morning, Monday through Friday. So thank you again for your participation. Have a great weekend and hopefully a safe weekend as well. So,
Appreciate you guys.
y'all.
All
See
right,
you later. Take care.
Good night.
Have
Live
See you at 3
fun.
o'clock. See you at 3
Take care.
o'clock. Yep.
See you later.
Bye-bye now.
Bye.